Namaste. In this video, we will discuss about the accounting treatment of government grants under Indian Accounting Standard 20. Indian Accounting Standard 20 prescribe accounting and disclosure for government grant and only disclosure requirements in respect of government assistance. So what the government assistance are? These are the assistance by government. Those cannot be valued upon, and those are in nature of normal trading conditions to an organization. So example of government assistance may be fiscal and marketing advice to industry, government guarantees, and government procurement policies, etc. So these are in nature where those cannot be valued. So this accounting standard only disclosure requirements for government assistance, but accounting and disclosure requirement of government grants. There are some exclusion to this Indian accounting standard, like agriculture will be dealt in IND AS 41. Government, where it is in partner with the entity. Tax benefits, those are limiting the tax liability, etc., and effect of changes in price. Government grant are nature of government assistance, where government transfer the funds to an organization on compliance of certain conditions. So based on the conditions, it can be classified in two types. One in nature of asset, where entity has to purchase, procure, or construct long-term assets. If these are the conditions, government grant will be classified as in nature of assets. And if does not classify in asset nature, it will be classified in nature of income. And forgivable loans, which lender undertake to waive repayment under certain conditions, is treated as government grant. Government grant will be recognized when there is a surety that enterprise will comply with the conditions attached to the grant, and there is a reasonable assurance that grant will be received to organization. If both the conditions are satisfied, grant will be recognized in books of accounts. Grant will be recognized based on the same principle if it is related to the receipt of cash or it is related to decrease in the liability. So the accounting principle will be same in both the cases. Accounting treatment of government grant will depend upon the nature of government grant. It can be nature of asset or it can be nature of expense. If government grant received is in nature of asset, there are two approaches to book the government grant. One is deferred income approach and another is to reduce government grant amount from the carrying amount of PPE. So let's see the accounting treatment. If grant is received, we will debit the bank and will credit the deferred income of government grant, and we will recognize it in P&L by debiting the deferred income and by crediting the depreciation in P&L. In case of reduce from carrying amount of PPE on the receipt of grant, we will debit the bank and will reduce the carrying amount of PPE. And by this approach, it will impact the P&L by reduced depreciation. And in case of expense nature, if expense is related to the current period or future period, so as per the matching concept, the government grant will be recognized in period in which cost is incurred, either reduce from the expenses or show it in other income. And in case the cost has already incurred, in that case, we have to recognize government grant in profit and loss account. Government grant may be related to non-depreciable assets. In this case, we need to recognize the related cost of obligation because of that government grant has been received. And based on the cost that is booked in P&L related to government grant obligation, we need to recognize government grant in books of accounts. Another nature may be government grant received having multiple conditions. For example, one condition, it has to be invest in long-term assets and has to increase the sales also. There may be such conditions. So in that case, IND AS says that we need to identify the conditions. Those are related to generation of cost and expense and the period. So based on the conditions, we need to identify the cost to be booked in P&L and period over which those costs are to be incurred. And based on both of these factors, we need to recognize the basis on which government grant is to be recognized in books of accounts where it carries multiple conditions. IND AS provides two options to book non-monetary government grant. It can be booked at fair value or enterprise may choose to book it at nominal value. Another concept arises in case of accounting of government grant when we have to repay the government grant that we have received because of failure to comply with conditions of the government grant. So it depends upon the nature of the government grant, whether it is in nature of income or it was in nature of asset. So accounting treatment depends on the nature and the policy we have adopted at the time of recognition of government grant. So in case of income, if we have any amortized deferred credit, first we have to derecognize that and the balance amount we have to book in P&L. And if there was no amortized deferred credit, then in that case we have to book it in P&L. In case of assets, depending on the first time treatment what we have used, we need to increase the carrying amount of the asset or reduce the deferred income balance we have available in books of accounts. And another concept is that we have to recognize the depreciation that would have been recognized in books of accounts if there was no government grant received. So this is all about the IND AS 20. And if you want to know more, you may reach on the number given below. Or if you want to learn about summary of another accounting standards or detailed learning of accounting standard, you may reach on the given number. Thank you very much.